Welcome to The Explainer. So, when you hear Bangladesh's IT sector, what's the first thing that comes to mind? If it's something like low-cost outsourcing, well, you're kind of working with an outdated map. Today, we're going to dig into what we're calling the Great Recalibration. It's this huge, fundamental shift that's completely rewriting the rules for how to succeed and invest there. All right, let's just jump right in with a statement that completely flips the script. The whole idea of low-cost outsourcing, it's just not the name of the game anymore. It's pretty much obsolete. And what that really means is that we're not just talking about saving a few bucks anymore. The whole conversation is shifting to finding real, deep, sustainable value. Okay, so that leads to the big question, right? If that old playbook is just gone, then what does the new one even look like? What are the new rules of the game? And, for anyone looking to invest, where on earth do you even start looking to find the next big winners?
So here's how we're going to tackle this. First, we'll look at what's beyond cheap outsourcing. Then, we'll dive into the new growth engine and pinpoint the top investment opportunities. After that, we'll get into the DACA talent equation, and finally, we'll look ahead with the 2035 vision. Let's get into it.
All right, Section 1, the new growth engine. We're asking, why is Bangladesh's IT sector maturing so fast? And look, this isn't about just one thing. It's about a bunch of really powerful forces all coming together at once, pushing the whole industry forward. It really boils down to three key drivers working together. First, you've got this massive acceleration in domestic digitization. Companies inside Bangladesh are going digital like never before. Second, the whole world is now cool with remote work, which has blown the doors wide open for Bangladeshi companies to serve global clients. And third, and this is huge, the local talent pool is just getting deeper and more skilled, which creates this amazing snowball effect for innovation. So now that we know what's fueling all this growth, let's talk about where the real opportunities are. I mean, it's one thing to know why the market's growing, but the real trick is figuring out where to find that value, right? Where do you place your bets? Okay, this table is basically a field guide for investors. It's super helpful. On one side, you have your average firm, the kind of generalist, founder-led shop. But on the other side, you have the investable firm. And that's the one that's specialized, that runs on solid processes, and is actually built to scale up. Big difference. And here's the absolute core of it, the quality of the money coming in. We're talking about a massive shift away from chasing one-off projects to building stable, predictable revenue from things like retainers and repeat clients. Honestly, this might be the single biggest sign of a mature, investable company. It's the difference between, say, a freelance gig and a real, sustainable business. So where are the hotspots? Well, the analysis points to 5 super promising segments. We're talking expert export services, managed cloud and cybersecurity, vertical SaaS for local industries, B2B fintech tools, and AI with a real ROI. And you know what they all have in common? They're all about being specialized, having recurring revenue, and solving really specific, high-value problems. That's what a mature market looks like. And I love this analogy for B2B fintech. It's all about the picks and shovels. See, it's not about being the flashy company striking gold. It's about selling the essential tools that everyone else needs to do their work. And when your tool becomes part of your client's day-to-day operations, well, that revenue becomes incredibly sticky. They just can't get rid of you. Here's another term you need to know, vertical SaaS. Now, this isn't about making a one-size-fits-all tool. No way. It's about building software that's perfectly tailored to a specific industry's needs. Think about a point-of-sale system for a local retailer, or a payroll system for a small business, or software for running a school. When you get that specific, that deep fit, that's a massive competitive advantage. Okay, let's switch gears a bit, because all the tech and strategy in the world doesn't mean a thing without the people who make it happen. To really get a handle on this industry, you've got to understand the human side of the equation. And that means looking at what life is actually like for the tech talent in the heart of it all, DACA. For the folks working in tech in DACA, everyday life comes with some very real pressures. We're talking about things like rent, the crazy traffic and transportation cost, food, utilities, even making sure you have backup power. These aren't just little things. They directly shape what people expect in a salary, their overall well-being, and ultimately, whether a company can even attract and keep good people. So you get this really interesting dynamic, this kind of push and pull. On one hand, DACA is where all the action is, the best jobs, the biggest clients, the community. But on the other hand, you're dealing with serious daily challenges, like the commute or even air quality. And that tension is forcing companies to rethink work itself.
That's why hybrid work models are becoming less of a perk and more of a core strategy. And here's the real takeaway for any investor paying attention. You can't just look at the numbers on a spreadsheet. The really smart companies get it. They understand that a great work environment, and that means things like flexible hybrid options, good managers, sane deadlines, is a huge competitive advantage. It's not just about the salary anymore. It's about the entire employee experience. So, where is all of this heading? Let's look ahead to 2035. We're going to see how all these pieces we've been talking about, the better revenue, the focus on talent, all of it, come together to paint a picture of what this industry will look like in 10 years. This is the 10-year transformation. At the heart of this 2035 vision is a huge leap in what you'd call operational maturity. Basically, the industry is moving away from relying on the heroics of one or two brilliant founders. Instead, it's building predictable, repeatable processes that anyone can follow. That, right there, is how you build an industry that can actually scale in a big way. And you can see exactly how that operational shift hits the bottom line right here. Just look at the projection for 2035. That big chunk of revenue from unpredictable one-off projects, it shrinks a lot. And what replaces it? Stable, reliable income from retainers and subscriptions. Now that's what a healthy, mature market's revenue mix is supposed to look like. Now, of course, this change isn't going to happen at the same speed everywhere. The data is pretty clear that some segments are on a much faster track than others. We're looking at areas like managed services, SaaS, and fintech really leading the charge. They're the ones set to become the pillars of the industry over the next decade. So if you take away just one thing, let it be this. The growth of the future isn't about headcount anymore. It's not just about hiring more and more people. It's about capability. It's about having better processes, deeper expertise, and stronger security. It's all about working smarter, not just getting bigger. And to make all of this super practical, here is a handy checklist for investors. If you're looking at a services company, you're going to want to check things like their client concentration and pipeline. If it's a SaaS product, you're digging into churn and retention. These are the kinds of questions that really separate the average players from the truly investable ones. So, to wrap up the outlook, let's put a spotlight on the top 3 most mature segments we're expecting by 2035. That's going to be managed cloud and security, export services, and domestic vertical SaaS. If you're an investor looking for where the long-term growth is, this is pretty much your roadmap. Which, brings us right back to the main idea. This quote says it all. Specialization, trust, and recurring revenue are starting to matter a whole lot more than just being the cheapest option. That is the great recalibration in a nutshell. The old way of measuring success is out, and a totally new formula for value is in. So, we'll leave you with this final thought. The question for investors really isn't if they should be looking at Bangladesh anymore. That ship has sailed. The real question, the one that matters now, is where to find that next value-driven winner. The opportunity is there for those willing to look past the old, outdated labels and find the companies that are already building the future today.